All right, good morning, everybody. How's everyone doing today? Nice to see you. We got about 18 of you in here. I like it. Gonna keep building that number. Guys, good to see you this morning. Welcome to the wonderful world of range-bound markets. I guess yesterday shook everybody up. That's okay. We're going to take a look at each market. You're going to be able to recognize through Fibonacci when a market is trending within a range. We're going to talk a lot about rules, a lot about building a plan. But before we do that, we are going to take a look at news. Go to forexfactory.com. Make sure there's not anything going on that can move that market erratic or unpredictable. I go to Forex Factory every morning. This is the first thing I do. I open up my charts while they're loading up. I pour a cup of coffee, and I just come take a look. And I'm looking for high impact news. Today is Tuesday, December 6th. The only news that happened today was an 8:30 a.m. trade balance. It was low impact, and you really didn't even see the market budge on that one, not even a little bit. We don't have any high impact news until Friday morning, which is pretty good. It's a nice clear sailing. Reminder that I'm not trading what the news says. I'm just looking for these red boxes because the market can spike and jump and be erratic, and I just don't want to be in the middle of that. Everything that I talk about, guys, each and everything that I talk about is right here on the education page. The goal of this classroom is to help you build a foundation, to put you in a position. Holy shit. All right, guys, can you hear me? Um, Anybody hear me in the room? I may have had. Okay. My headphones weren't plugged in, and I just realized that. I was like, oh man, I've been talking, and nobody has any idea what I said. So sorry about that, guys. What I did say is that here, whoops, wrong one, forexfactory.com, we're looking for that high impact news, looking for these red boxes, making sure that there is nothing going on that could be erratic, make the market jump. Today, Tuesday, December 6th, we had trade balance news at 8:30 a.m., low impact. All low impact tomorrow. We do have a medium impact on Thursday that we'll keep our eyes on, and then high impact on Friday. Doesn't matter to me what the news says. I'm not worried about what the news release is. I just don't want to be in the middle of something that can be problematic. And everything that I talk about comes from the education page, guys. There are no secrets with Nexgen. We don't give you a little and hold back and make you resubscribe or purchase the next level. Everything that I talk about during the day is right here on the education page. And there's two main portals. There's the software user guide. This is your NinjaTrader how-to. If you have any questions about NinjaTrader, if you have any questions about just using that platform with the software, you're going to find it in the user guide. Opening, closing, scaling charts, putting in stops and targets, and really anything that you need is going to be right there. Remember that this is your class. This is an educational class. If you have a question about NinjaTrader during class hours, raise your hand, ask your question. It doesn't matter if your question is about a trade setup, if it's about NinjaTrader. The whole goal of this class is to get you any and all the answers you need so that you're comfortable. And then the next section is the tutorial section. And this tutorial section, this is where everything that we talk about comes from. When we talk about the rules, when we talk about building a plan, when we're talking about the advantages, the different looks in the market. And the URL says building a foundation, and I think that that's such a key thing to remember. You're building a foundation, you're brand new. You are allowing yourself to be a student. even though you've probably had a tremendous amount of success in your professional career, you're a brand new Nexgen student. Let yourself be that way. Don't put the pressure on yourself to know everything on day one. I think that that's important. And then what we're going to do is we're going to talk a lot in the first hour about the high probability trend trade. We are going to talk about the one trade that repeats itself on every market every day so that you can be a trading success. And focusing on these trades is going to teach you how to read your charts. And I want you to know that this is definitely, you've got to put the horse before the cart, I believe is the phrase. You want to build a foundation of being able to read your reading your charts, because chart reading is 90% of what you're going to do during the day. You're going to look at your indicators, and you're going to be able to understand where the market is likely to continue, and you'll use that continuation point for entries for a high probability trend trade. You'll understand where the market is likely to go, and you'll be able to use that likely to go area for intelligent thoughts on profit targets, and then you'll be able to understand where the market is likely to stop, and this is going to be like a red flag for you. These are areas that can end the trend that may cause reversals. So these three elements, these three chart reading elements, are going to give you the ability to focus on what we call a high probability trade. And this is what we talk about for the first 30 minutes or so in class. This is designed for new users, for people building that foundation, for people just becoming comfortable with the indicators. And a high probability trade is defined as when each indicator on every chart agrees with the rules for the trade. Typically, this is when all your triggers are the strongest, no termination conditions exist, there's no trouble spots between you and your target. This high probability trade is going to teach you to read indicators. The high probability trade is going to give you the ability to recognize where the market is likely to continue, where it's likely to go, and where it's likely to stop. New users love to know that your ability to read charts is going to take you beyond this one trade, guys. You're not going to sit and be a high probability trend trader for the rest of your life, probably. Your ability to read charts is going to lead you to being able to take a medium probability trade. And this is when most indicators line up for a trade. However, small issue exists. And this will be the vast majority of your trades. When you're executing a medium probability trade, your chart reading is going to allow you to recognize that a small problem exists. You're going to take these trades and manage them assertively. Your chart reading is going to allow you to manage them assertively. And then if there's trouble in your way, your chart reading is going to help you identify that trouble spot, and you'll be able to take quick profits there, reduce your risk to a zero loss. So it is very much a progression. We're going to start simple, we're going to start focused, we're going to build that great platform from which to grow, and then your trading plan is going to grow as you do. But for the first 30 days, we're going to stay focused on that high probability trend trade. And that high probability trend trade really only has three rules. When you talk about the high probability trend trade, good morning, Ed. Rule number one says after a breakout or a new top or bottom, you're going to have strong trigger lines, small located outside of the large, in order to look for trend trade rules 2 and 3. Rule number 2 says do not trade into any Fibonacci areas that are expected to hold. Wait for an area to break with strong triggers before trading in the established direction. And then rule number 3 is going to give you your rules for entry. It's only 3 rules, and I think it's important to remember simplicity is key. Those 3 rules are going to take place on only 2 charts. When you open up your workspace, when you look at your charts, on the left-hand side you have a 13-2 chart. And your 13-2 chart is going to be your larger, slower chart. You're going to use the most current bar on that 13-2. And it's very much like a broad stroke of a brush. That 13.2 is where you're going to gauge the overall temperature of the market. You're going to be able to determine the trend. If the background is green, you're in an uptrend. You're only looking for rules to be met for high probability trend trades long. If the background is red, you're in a downtrend. You're only looking for rules to be met for high probability trend trade short. So you're going to be able to give yourself the advantage of trading with the trend, and that's going to get you started off in the right direction. Next, you're going to be able to gauge the overall momentum of the market. This is rule number one for a high probability trend trade. Those strong trigger lines. That's rule number one. That happens on the 13.2. And then you'll be able to recognize whether or not there's areas likely to stop the market. You'll be able to identify termination conditions, which is rule number two for a high probability trend trade. So 2 of your 3 rules are going to happen on only one chart. And then when those rules are met, then and only then will you head over to your 5-1 chart, which is a smaller, faster chart. And I want you to remember that your 5-1 chart is an entry chart. You're going to be able to refine that broad stroke of the brush that is the 13.2. You're going to be able to identify the best of the best area where the market is likely to continue, and you're going to use that spot for entry. And by using that spot for entry, you're going to be able to reduce your risk and to maximize your profit potential. So when I showed you the rules the first time, there's an awful lot of words in there. Guys, here I've simplified 3 rules, and then I've added in the advantages that the rules provide. And I think it's important to remember that rules provide advantages. Otherwise, why would we have them? So rule number 1 is going to say strong triggers, which provides us the advantage of momentum. Rule number 2 says no termination conditions, which provides us the advantage of a clear path. And then rule number 3 is where we define that entry point. We're going to use a limit order to buy or sell a pullback in an area inside of favorable large triggers. And we'll talk about what that means and look at it. But that it provides us the advantage of an entry where the market is likely to continue. So each of these 3 rules gets you to the next rule. And each of these 3 rules gives you an edge. It provides you an advantage in the market. And when you put them all together, you have the high probability trend trade. And that high probability trend trade is a trade that typically wins 70 to 80% of the time. So we're going to start off rule number 1. Strong triggers. What are strong triggers? Well, strong triggers in an uptrend when your background is green on that 13.2 are small triggers up and above the large triggers. The large triggers are widening. The small triggers are above. And this means that the odds are favorable for the market to continue up. This space created between the two gives me the advantage of odds favorable momentum. In a downtrend, small triggers are down. They're below the large triggers. The large triggers are widening. They're angled in the direction of the trend. And this space created between the two lets me know that the odds are favorable for the market to continue down. Once again, strong triggers provide the advantage of odds favorable momentum. So when we look for a high probability trend trade, it's important to commit to this look, because as the small triggers return to and break inside of the large trigger lines, we call this a weakening of the large triggers. And when those large triggers weaken, anything can happen up or down. We've given away the advantage of momentum. So if you're new with me, if you're kind of studying what we're doing again, you're getting back, you're looking for those advantages, give me a Y in the room if you're with me. Odds favorable momentum is the first advantage that we give ourselves looking for the high probability trend trade. That means that in an uptrend, from that point where the small triggers break away from the large until they return, this is going to be your zone. This is going to be the area where you're going to look for those high probability trend trades to be met. When you see these tails or wicks on a 13.2 bar, if you're scrolling back after the fact, These are all potential entries for a high probability trend trade, and they all happen during odds favorable momentum. Same thing in a downtrend. The small accelerate away from the large. The odds are favorable for the market to continue down. These circled tails are potential entries on the 5-1. We're going to use these just a little bit to help you understand and study the relationship between the 13-2 and the 5-1 chart to help you pick that best of the best entry. So rule number 1 is the advantage of momentum. Rule number 2 says don't trade into a termination condition. Don't trade into an area where the market is likely to stop. It's a very simple process recognizing termination conditions. It's just a comparison between a Fibonacci-based indicator and your trigger lines. The same trigger lines that show you the advantage of momentum, we're going to use to recognize whether or not an area is likely to stop the market. Those areas can be blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1 dots. It can be a cyan divergence low line, a magenta divergence high line, or it can be a large chart midband if the large triggers are a full bar away. These are all areas that when price reaches these areas, we have that comparison. There's also a termination condition, any third divergence in the same area. This is a termination condition that's not only going to help you identify where the market may reverse, this is the condition that's going to allow you to manage those medium probability trades when you get there. And we're going to talk about each and every one of these, but first let's talk about just identifying when we have a termination condition. I'll take a picture of the picture. Two things have to happen in order for you to identify a termination condition. The first thing is price reaches an area, meaning that these price bars, these red bars, come down and reach Fibonacci support. When they reach Fibonacci support, the only thing that you have to do is ask yourself, where are my trigger lines? Well, if they remain above support, support is a termination condition. It's an area that may reverse the market. Price reaches the area, trigger lines remain above, no more short trades. Rule number 2 isn't met. Rule number 2 says allow an area to break with odds favorable momentum before attempting to trade in the established direction. That means that in order for an area to break, in order for this area of support to be considered broken, both small and large triggers must break through the area. They must be below the area. So price reaches an area, no trigger lines are able to break through, stop, no more short trades. Small and large break through an area with odds favorable momentum, it's okay to go. These are your two components for a high probability trend trade. You either have the advantage of a clear path or you don't. I'm going to talk about your first 50-50 trade, or your first medium probability trade. And it's called a 50-50. And it's not an indication of whether or not you have a 50-50 chance of winning. It simply means that the smalls have broken an area, the large have not. The area has the potential to break, but has not yet. And I think it's important that you remember that. It has the potential to break, but it has not yet. So, smalls have broken the area, the large have not. This is a 50-50 trade. This means that with this odds favorable momentum, this area of support does have the potential to break, but it hasn't yet. So you have to take a little bit of care in your entry on the 5-1. If you attempt to trend trade short, must be perfect. And that means no divergence, small window of opportunity, strong triggers. So guys, I like to put this picture together because this is going to be your first medium probability trade. This is going to be the one that takes you outside with your chart reading that high probability trend trade. And I'm going to go ahead and upload this one to screencast. I'm going to give you guys a picture in the room. Whoops. Hold on to this one. Save it on your desktop. Do something. But that's a great, when an area is broken, when an area is not, and when an area has the potential to break. When you go back to all of the videos, there's some great videos on this one as well. I'm going to find the link to that one for you. But initially, all you need to know is price reaches an area, triggers remain above, no more short trades. Small and large break an area with that odds favorable momentum. You can look for an opportunity. Smalls break, large do not. It's called a 50-50, and you want conditions to be perfect. Termination conditions are going to happen all day long. And there's a couple different ways to look at them. Price comes down and creates a pivot, which means that the market goes from down to up or up to down. Here we get a cyan divergence line, which means that there was a loss of momentum in the market as it creates this pivot. This on its own, beyond the trigger lines, this is not, or beyond the fibs, this is not a termination condition. This is simply a pivot with divergence. It creates this line that goes to the right. It's when price reaches that key area that you ask yourself, where are your trigger lines? They all remain above. This cyan divergence line becomes a termination condition. When the market exceeds it, price goes past it just a little bit and then heads the other way. This is what we call a pivot stop out of a prior divergence line. And pivot stop out just means that this pivot, all of the buyers were excited to go up, and then the sellers pushed them, stopped them out, and then allowed the buyers to do what they were going to do. This is a very powerful termination condition. And when it happens from a key area, it typically creates larger moves in the opposite direction. Pivot stop out at resistance that creates a full reversal that gives you odds favorable momentum is your absolute best of the best look. I like this chart because it reminds you that 90% of what we do is chart reading. Price reaches resistance. All of your trigger lines remain below. Rule number 2 hasn't been met. There are no long trades. Price comes all the way back to support right at that mid-band. Absolutely no trigger lines break through. No short trades. 90% of what we do is waiting for the advantages. Price creates that pivot stop out. Gives us a full reversal of the market, meaning those large go from green to red. Provides odds favorable momentum. This is where we're looking for that high probability trend trade. This is our best of the best look. Looking for that high probability trend trade that happens after a termination condition on the 13-2 is your best chance of success. This next picture reminds us why our rules are in the order that they are. Rule number 1 says that I must have odds favorable momentum. Here I have smalls below the large are wide, they're angled in the direction of the trend. Rule number 1 lets me know that the odds are favorable for this market to continue in the direction of the trade. Price reaches these 1-to-1s, this key Fibonacci area. All of your trigger lines remain above. Rule number 2 has not been met. This is a termination condition. This is an area likely to stop the market. And it certainly does. It creates a bounce. There's a fight between buyers and sellers. Ultimately, we get a full reversal that provides us odds favorable momentum. And there's another one of those circles on the tails. Guys, this is your best of the best. After a termination condition that creates a full reversal, looking for that odds favorable momentum, and then looking for that entry on the 5-1. This is what we would call a strong bottom. A termination that creates a full reversal from a low is a strong bottom. A termination condition that creates a full reversal from a high is a strong top. And that's the precursor to your absolute best of the best. Sometimes you'll get a pivot that seemingly comes from nowhere. There's no areas, no 1-to-1s, no divergence lines. This final termination condition is going to help you identify change happening on a 13.2 even faster. And it's going to use a 5-1 chart, your smaller, faster chart. And you'll be able to look for 3 divergence in the same area, the same price range. This is a very powerful condition that may reverse the market. These 3 divergence, these 3 losses of momentum, become even more powerful when the small trigger lines are inside of the large. Remember, anything can happen triggers. Coupled with 3 losses of momentum, the market may reverse. When that third pivot is higher than the previous from a low, meaning that not only could price not exceed the previous pivot, but we've lost momentum a third time, it's even more powerful. Same from the top. Third pivot, lower than the previous, becomes a very powerful indication. You're going to see this on the 5-1 chart when something like this is happening on the 13.2, when something like this is happening on the 13.2. Recognizing change on a smaller, faster chart. That's that same concept that's going to help you manage medium probability trades. If you enter a trade here at a mid-band, here at 1-to-1s, you're in a short trade, you have odds favorable momentum, everything appears to be going your way, and your 5-1 gives you 3 losses of momentum. Your 5-1 gives you small triggers inside. This is your key look. This lets you know that it may go against you, that you can exit with a small loss, with no loss, a small profit. But reading change, chart reading on the smaller, faster chart to help you understand what is happening on this larger, slower chart. So guys, termination conditions give you the advantage of a clear path, not trading into a termination condition. So when you have the advantage of momentum, you have the advantage of a clear path, now it's time to find that entry. We turn our attention away from the 13.2, from that broad stroke of a brush, and now we're on our 5-1 chart. We're on that entry chart, that smaller, faster chart, and it's time to refine the broad stroke of a brush. What we see on 1 bar on the 13.2, odds favorable momentum, no terminations. Your 5-1 is going to look like this. In an uptrend, there's going to be green bars, plenty of up bars. Large triggers should be strong, wide, angled in the direction of the trend. And it's at this point in time where you make the decision that it's time to look for an entry. So you're going to focus on those large triggers, and you're going to look for the areas that are going to fall within them. Rule number 3 says that I'm going to use a limit order, meaning that I wait for the market to come to me. To buy or sell a pullback, meaning that the market in an uptrend has to pull back to my limit order, and that pullback needs to be at an area of support or resistance inside of favorable large triggers. Areas of support or resistance can be mid-bands, fibs, or 1-to-1s. So right now, all we're doing is we're identifying that I have areas, I'm identifying that I have strong trigger lines, and I know that my rules are met on the 13.2. So if I need to buy a pullback, I need that market to come to me, which means that after all of these green bars, all of these up bars, I need a down bar or a reversal bar. This reversal bar signals the beginning of that pullback, that small retracement in price. When this bar prints, I'm going to officially recognize my window of opportunity, that area where the market is likely to continue. That area of opportunity for longs is going to be from the highest point of support, this mid-band right there where those large triggers are coming up, to my lowest point of support, those 1-to-1s inside of those favorable large triggers. It's this area from the highest point of support to the lowest point of support inside of favorable large triggers where the market is likely to continue. I'm going to right click and I'm going to activate my limit order to get me into the market right at the top of that window. And I'm going to do it at the top of the window because I have odds favorable momentum on the 13.2. Because I have no termination conditions. I have the advantage of momentum and absolutely nothing in my way. I'm going to take that trade from the top if the market comes back to me. If it does, I'm long. I've entered the market at 79.21. I have the advantage of momentum, I have the advantage of no termination conditions, and I have the advantage of an entry where the market is likely to continue. My initial protective stop will go below that window of opportunity, below those one-to-ones and the large triggers. Initially, my stop is probably going to be 12 to 14 ticks, give or take. Guys, I will take this trade because of the advantages my rules give me 100 out of 100 times, 1,000 out of 1,000 times, without hesitation or fear or anxiety. Because this high probability trend trade setup typically does this 70 to 80% of the time. When the market moves up in the direction of the trend, my protective stop goes from below that window of opportunity to below that reversal bar that got me moving that direction. Because I waited for the pullback to the area of support, my profit potential has increased. My risk has reduced. Guys, this is your high probability trend trade. This is the one that you need to study, that you need to learn, that you need to trust, because this is the one that's going to teach you to read your charts. Remember, if we put it all together, why were we circling those tails? Well, if I scroll back on my 13.2 and I see odds favorable momentum and I see no termination conditions, and there's one of these bars with a tail, I'm going to circle it. And if that tail lines up with an area of support inside of favorable large triggers, I know that my rules are met for a high probability trend trade. And I love this picture because this exemplifies on that 50-50 trade. Small triggers have broken through the area with odds favorable momentum. You can see that the large triggers haven't quite cleared the area. We talked about on a 50-50 trade, we want the entry conditions to be perfect. On the 5-1, no divergence, small window of opportunity, strong triggers. When I come to the 5-1, no divergence on the pullback. The smalls are well outside of the large. That means that I have strong triggers, odds favorable momentum, and my window of opportunity, my areas of support inside of favorable large triggers, are very compact and concise. This is your best of the best look, guys. This is the look that yields the best results. A couple things I want to talk about because I had some great comments yesterday about this. Some people say, but Mark, there's only 5 or 6 ticks before that termination condition. Aren't we getting too close to that? It's a great question. Remember that 5 to 6 ticks to the termination condition is actually being measured after the pullback from that point where the market is likely to continue. So that 5 to 6 ticks turns into 25 if you're taking the best of the best entry. The other question that we had yesterday was, but Mark, the small triggers have turned against me. Well, remember that we're gauging momentum on a 13.2, right? On the 13.2, we have that odds favorable momentum. We have a freight train of momentum to the upside. In order for this pullback to get to the best of the best area on a smaller, faster chart, more often than not, your small triggers will turn against you. They have to. It's a moving average. So let's review. 3 rules on 2 charts. Strong triggers on the 13.2. No termination conditions on the 13.2. And then we're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. These are your rules. Get in the habit of writing them on your chart every time you take a trade. And then your study of these rules is going to help you understand, recognize, and trust the advantages that they provide. Rule number 1 provides the advantage of odds favorable momentum. Rule number 2 provides the advantage of a clear path, nothing in the way. Rule number 3 provides the advantage of entering the market where it's likely to continue. Guys, this is your best of the best. This is your first 30 days in order to teach you to read your indicators. This classroom is designed so that you can post your pictures in the room every day. Every time you take a trade, you can share it with me. We can talk about it. We can look at the rules. You can get feedback. And you can begin to focus heavily on making sure that you're following the rules, that you're following your plan. And you want to write a plan. You want to have these rules in front of you. You want to commit to one look, so that you can learn to read your indicators. And guys, I've provided this one in the room a little bit earlier. What time did I do that? Right when class started at 8:53 a.m. If you scroll up, there's a copy of this example plan. This is your foundational approach, guys. This is the one that's going to teach you to recognize your entries. And I want you to personalize it. I want you to make it yours. Steal this one, but type it out. Use your own voice. My trade is the high probability trend trade. For the first 30 days, I'm going to focus on the one trade that happens on every market that provides the best chance of success. And in order to enter this trade, I must have the conditions of this checklist met. And here's your checklist again. I'm going to put it in the room for you. And if you're a new user and you're still working on these looks, here's a checklist with examples from the manual to help you understand the best of the best looks associated with each rule. In order to enter, I'm only defining my entry point. I'm going to ask myself, is the market coming from a good top or bottom? Is the market coming from a termination condition that created a full reversal? If it is, that's bonus. That increases the likelihood of success, but it's not mandatory. Do I have odds favorable momentum on the 13-2? If I mark yes, then I know that I can go to my rule number 2. Are there no termination conditions on the 13-2? Once again, if I can mark yes on this checklist, print it out, put it in front of you, then I'm going to make sure that I have an area for entry inside of favorable large triggers on the 5-1. If this checklist is met, I'm obligated to take that trade. I can't form an opinion. I'm not allowed to be emotional. You will be initially, but eventually you won't be. You'll create this trust. If your rules are met, take the trade. It has a 70 to 80% chance of success. This is your most basic, your best of the best to get you into that high probability trend trade. As you begin to develop into the medium probability trade, I added this into the basic list because most people are going to take these 50-50 trades pretty quick. So under entry conditions that must be met, I put on 50-50 trades. I don't want divergence on the 5-1. My small triggers must be outside of the large on my 5-1 for entry. Guys, this is the most basic plan talking about the entry. I put pictures of my entry into my plan. And if I click that link, it shows me a 100% rules met trade. It lets me know this is exactly what a short trade needs to look like in order for me to enter the market. I thought I had a long trade in there. I may not. Nope, just a bunch of shorts. So I should probably put a picture of a long trade in there. Let me know exactly what has to happen in order for me to enter the market. Guys, this is your entry. Give me a Y if you're with me. Your first 30 days is dedicated to understanding the entry for a high probability trend trade so that you can learn to read your indicators, so that you can learn to give yourself instant recognition of odds favorable momentum, instant recognition of termination conditions, and nearly instant recognition of a window of opportunity. Guys, this is your first 30 days. During that first 30 days, remind yourself that the goal is entries. Eventually, you're going to have to manage that trade. You're going to want to clearly define your management plan. And guys, your management plan is going to grow a lot with your ability to read indicators. In the beginning, I like to keep it very simple. I will trade 2 contracts. My initial stop will be 12 ticks, adjusted to below or above the window of opportunity initially. This is very mechanical. I know exactly what I'm trading. I know exactly where my stop will be, and I'll only move it to put it below the window of opportunity, above the window of opportunity. That stop will be moved, Alan, because it gives the trade a little room to work. What typically happens when you create a window of opportunity, let me go up. One more picture. When we're talking about where the market is likely to continue, that window of opportunity comes from the highest point of support to the lowest point of support. And what you're typically going to find is 12 to 14 ticks is going to give you room to be outside. Exactly, Alan. It's going to put you outside of that window of opportunity, which is where you want to be. And remember that when you enter the trade, you have the advantage of momentum. You have the advantage of nothing in the way. And on the 5-1, you have 25 years of research and study going into helping you recognize where the market is likely to continue. That initial risk gets reduced once a reversal bar prints in the direction. So that 10 to 12 ticks typically becomes 5 to 6. It's almost always cut in half on your winning trades. And then that mechanical approach continues. I'll take profits on my first contract at $100. Move my stop to break even manually. What does that mean? That means that I have $100 in the bank, right? And I can't lose on the second contract. Guys, this creates a confidence in you. That memory of success, that winning trade, that $100, creates a little dopamine kick. It makes it easier to hold that second contract. It makes it easier for you to feel good about everything that you're doing. Creates a win. That success creates confidence. And then your second target will be at 200. For the first 30 days, you're looking for a $200 move. That's it. But it's 2 contracts, so you're looking for $300 in profit. The reality is that for that first 30 days, you're going to have a lot of trades that are $100 trades and break even. Remember that your study period isn't about getting rich. It isn't about making the most money. It isn't about hitting home runs. It's about learning to recognize the advantages of an established and proven methodology that wins more than it loses, and learning how to enter that trade with all of the advantages present. When you take these pictures of your best of the best trades, you're going to put them in this trade tracking sheet, this spreadsheet. And let me show you where it's at. If you're brand new with us, this is in your Nexgen Study Picks folder. If you've been here for a while, maybe you don't have it, but you're ready to commit, there's a trade tracking sheet right in the tutorial section. There are instructions on how to download it, but your trade tracking sheet does a couple things for you. The first tab lets you put every trade that you take during the learning process, every trade that you take, put it in there, annotate the chart, write your rules on the chart, put a picture of it in your spreadsheet so you can go back and study. You can study what's making you successful, you can study what's keeping you from being successful. When I started using my spreadsheet, the one thing that I realized is that I was amazing at trading in determination conditions. I would trade into every red and blue line on God's green earth, hoping that it would break. And it took a while. It took me trading into those termination conditions, but more importantly, it took me posting those in class and having John Novak, who taught the class then, tell me, hey Mark, I love the momentum. I see what you're doing. The entry is great, but you're trading into an area likely to stop the market. because you're finding that you're losing more than you win. So this first page lets you go through and really establish some patterns in the market and yourself. The second page is your favorite looks, guys. These are all high probability trend trades. These are actually all clients' high probability trend trades, perfect rules met trend trades. Each one of these, the focus isn't whether it won or lost, it's focusing on the rules being met. And after you take 30 days worth of perfect entries and hopefully 30 days worth of really bad entries with great conversations, you'll begin to work on a management plan. You'll be able, hey, K-Dog, you'll be able to understand when it is appropriate to hold for longer moves because you'll be able to read your indicators and understand where the market is likely to go. You'll understand when it's appropriate to exit a trade before profit targets are reached because you'll be able to read your indicators and understand that change is happening. So this management plan comes about so that you can capitalize on the best of the best trades. So I'm going to put that example plan in the room for you one more time so everybody's up there. Guys, write your own plan. Steal this one. Put your name on it. It's okay. Whatever you need to do. But commit to a plan. Commit to one thing. And have the goal of each and every one of your trades looking the same for the first 30 days. That consistency is going to help. And it's going to help a lot on your journey. Are there any questions about the rules for a high probability trend trade? Are there any questions about how to write a plan? Are there any questions about how to go back and study to look for those best of the best opportunities? Look at this termination condition that creates a full reversal. It gives odds favorable momentum. It takes us down to the next area. There you go, Elvis. Let's see if you can stick to it. Now I'm holding you accountable to your plan. And guys, that's why you write a plan, and that's why I invite users to share their plan with me via email or here in the room if they're silly like Elvis. Share your plan with me. Let me hold you accountable. Let me help you grow. That's what this classroom is designed for. 15 hours a week. My goal is to look at what you're doing and to help you do it better. The more questions that you ask, the more pictures that you share, the more conversations that we have, the closer you get to your goal, the faster you get to your goal. Quick chart reading. I have anything can happen triggers on a 13-2. I also have a loss of momentum on my 5-1. I've given away the advantage of momentum, right? Rule number 1 is not met. Let's see what happens when we give away our advantages. This is not a high probability trend trade. It is an area inside of favorable large triggers. But rule number 1 isn't met. And guys, there goes the market right beyond that window of opportunity. Give me a why in the room. This was a live example of why you commit to the advantage of momentum. Notice that we don't have strong triggers on the 5-1. The smalls are right up against the large. Divergence, a loss of momentum printed. Guys, your rules, rule number 1, just kept you out of a short. Just kept you from taking a loss, kept your serotonin intact. So we're going to do a lot of this, a lot of large chart reading. We're going to do a lot of small chart reading, and this is what we're going to do for the rest of the day. We're going to couple this with me coming through and looking at your charts, looking at what you did today, and talking about, are we following rules? Gary posted the first one. Small triggers. Let's walk through it. Gary has his own checklist. I love it. Does he have a good top or bottom on the 13-2? He says yes. I agree. Gary has a termination condition that creates a full reversal. That is the textbook definition of a good top or bottom. Does he have any termination conditions on the 13-2? He does not. There's nothing in the way. There's room to the next area. Does he have odds favorable momentum on the 13-2? Absolutely. Small below the large, larger wide, angled in the direction of the trend. Did he have an area for entry inside of favorable large triggers? Without question, he did. He had that mid band. And guys, one thing is this trade had split trigger lines. So that window of opportunity goes from 4,000 all the way up to 4,375. This window of opportunity is almost 4 points wide, which means what? That if you're going to put your stop outside of that window, you're risking 5 or 6, right? 5 or 6 points. Is that acceptable risk to you? Gary says, I'm willing to take it from the bottom, but that's as far as I'm going. Takes a small loss on a good-looking trade. Gary, there weren't any weakening of the triggers. Everything was strong. Everything was pointed the right direction. And this one actually went back up. This was just a market that didn't want to continue the move. Alex, smalls below the large are wide. They're angled in the direction of the trend. You have no termination conditions. You take a picture-perfect entry at an area inside of favorable large triggers. You take quick profits, $100 on the first, a second higher divergence prints. The small triggers are inside. You're out for break even +1. Alex, absolutely picture perfect. Not only is it a perfect entry, it's beautiful management. I'm going to take this picture, Alex. I hope you don't mind, because I want to be able to recreate what you did. So I'm going to put it into my spreadsheet under my personal trade setups, my favorite looks. I'm going to call it Alex Perfect Trend Trade Short. And guys, what you don't know is what we're going to do is we're going to update the spreadsheet pretty soon. When I get to, I don't know, 75, I'm over 50 now of your perfect trades. We're going to update this section, put it into the spreadsheet section for you guys to study. Great trades. And Gary, just so you know, I took that same trade you took. That was a good one. It's a great looking trade coming from a great top. All right, who's next? Edwin, Ed D. Nice to see you. Ed, not odds favorable momentum, right? Large triggers are above the area, smalls are below. They're not wide yet. And then don't have favorable large triggers. The large are down, or the synthetics are down, and the large are flat and lifeless. No momentum there. And I'm telling you guys, this is not a good look. That's not a good trigger look. I was watching this one set up. We talked about those split triggers earlier on the short that Gary took, creating a wider window of opportunity. This is your best of the best look when you're talking about trend trades that have an advantage. Your large triggers, your synthetic triggers are one on top of the other. They're railing in the direction in that tiny little window of opportunity. The tighter the triggers, the smaller the window. This is your best look, guys. I'm going to put this one in the room for you. This flat trigger look means that there's no life in the market. There's no momentum in that market. Ed, I watched this one set up, and it didn't have those advantages for me. Paul, let's see what you got. Termination, full reversal, 50-50 trade. No divergence on a 50-50 trade. I like it. You're in at 76.41. You get a higher divergence and you're out break even. And that's the first divergence. I get it, 50-50. There's a divergence. You take it off, and then it pushes down a little bit more. Paul, great pragmatic approach to management. That's how you take a 50-50 trade. The only challenge with this one, Paul, is that it was 50-50. Those large triggers are all the way up at the reversal bar, and you've reached the mid-band, and that area hasn't broken. It creates some challenges. And it looks like you waited for a reversal bar, but that's not a market flow signal. Nice trade, Paul. Good management. Ed S. 5-1, 13-2. Odds favorable momentum. Here's a 50-50, right? Room to target. Odds favorable. You say even with divergence, with that look from a good bottom, I'll take a shot. You get in the area inside of favorable large triggers. Quick profits. Not willing to lose. Ed S. Beautiful. Nice trade. Then here's the second half of it. Second divergence prints. You exit per my plan. One of my favorite phrases in all of trading. Per my plan, I had to exit that trade. Because the conditions changed on my smaller, faster chart, my plan says don't sit and hope on a 50-50. How to get larger time frame triggers on smaller time frame chart. Reef guy, I'm going to go through a moment of honesty with you. I am so not the tech guy, but let's see what we have. That may not be it. Adding or changing synthetic triggers and Fibonacci lines. Right there in the instructions. Take a look at that. See if it answers your question. If it doesn't, remember, you can always put a ticket in with Jason, let him help you out a little bit. John Novak may even pop his head in here and help out a little bit. This is stuff that I don't do. I know it's silly, guys. These are my charts. This is exactly what I trade. The same thing that I teach. So I tend to not adjust the software too much. For me personally, I think it puts me outside of my limits. Kevin, let's see what you got. 50-50 trade. Does my plan keep me out because of divergence on the 5-1? Kevin, yes, my plan does. But remember that my plan, Kevin, doesn't have to be your plan, does it? Maybe on a 50-50, if it's coming from a good bottom, you say to yourself, I'm willing to take a shot. I'm willing to risk that money. Maybe you say to yourself, with one divergence, I'm good. With two divergences, I won't. Maybe you say, I'll wait for a market flow signal. Kevin, I think one of the biggest challenges that users face is trying to take trades based on what someone else is doing. That's why I'm a big fan of my trade is, my plan is, my entries are, my exits are. My brother and I, we read charts really well. And we talk about what we see. And we see the same thing. And we read the indicators the same because we've studied, we've done it. But we have two very different trading plans. What he likes and what I like are just two different things. So, Kevin, just because it's not my trade doesn't mean that it can't be your trade. Start taking pictures. See how many times it wins, how many times it loses. I can tell you that I've done a lot of study on that, and I don't know if I kept the pictures, but if you look at my screencast, I've got 50-50 pictures all over the place. 50-50, no divergence, beautiful entry. Like, I go back and I study this look, and this is how I develop my plan. 50-50, no divergence, perfect. Couple divergences, not the same. So you'll come up with a plan that works for you. Take those pictures, keep asking the questions, post in class. But the answer is yes. That one is not a trade per my plan. Might be for yours. Alan, let's see what you have. Stopped out, rules followed, I think. Man, I love everything about this picture, Alan. And before I go any further, thanks for posting. I see that the box is black right next to it. You're a student. Trading gold. And I love that you're on simulator while you learn. Alan, are you with me? Let's talk about it. Awesome. So let's take a look. And there's a few things that are happening here. Odds favorable momentum. Small's above the large, right? Good job. Great recognition. I'm going to drop this down just a shade. There we go. Is the market coming from a termination condition that creates a full reversal? Alan, it is. I like that look. Nice job. Do we have odds favorable momentum? Small's above the large are widening, angled in the direction of the trend. I even like that one. Nice work. And this is the one that got you, Alan. Price reached an area of resistance. All of your trigger lines remain below that area. So this is what we call a termination condition. This is rule number 2 not being met. You hit an area likely to stop the market. And I'm going to give you another indication on why I definitely, well, that's okay. I see exactly what you're saying. So can we agree? And if not, it's okay. Price made it, right? Price pushed all the way up to that area of resistance. What do you think, Alan? Yeah. So when price reaches an area of resistance and your trigger lines don't break, it doesn't matter if there's room from an entry, because we have to stop looking for the entry because the termination condition has been reached. Does that make sense? Aha moments, I love those, and this is why we have this class. The other thing that's pretty cool, Alan, and you probably didn't recognize it, and this is a chart reading thing. When price pulls so far away from these large triggers that a full bar can be formed to get back, price typically snaps back and closes that gap. And once again, let me go to my pictures because I take a lot of pictures, Alan. I'm going to show you. Here's a picture of it. When price pulls so far away from those large triggers that a full reversal bar can be formed, price very often closes that gap. So let's look and see if there's a live chart example. Price reaches the mid band here, Alan. See how there's a full reversal bar's worth of room to get back to those large triggers? We anticipate price to snap back and close that gap. And that price snapping back to large triggers is the exact same look that gets us our great entries on the 5-1. No worries. And this is one of those ones that you study. That's not a very pretty trade, but even here, price snaps back to those large triggers. Snaps back to those large triggers. So when we have odds favorable momentum, when we clear these areas, see how price pulls right back to those trigger lines? And then, if we have those areas of resistance inside, guys, I hope some of you are getting paid on this trade. This is a 50-50 trade, right? Smalls are through with odds favorable momentum. No termination conditions, right here, 50-50. No divergence, smalls outside of the large. Pulls right back to that window of opportunity at 39.80. And guys, you're 8 points into it right now. This is a high probability. This is such a good looking trade. I'm going to take a picture. Sorry to interrupt y'all's charts, but this one's so nice. I feel like I would be doing myself a disservice if I didn't use my checklist, right? Annotate that chart up. Draw an arrow right here. Use my call out that says 50-50. Need perfect entry. No divergence. Strong triggers. Small window. Guys, give me a Y in the room, especially if you're brand new. This is a good one. I'm going to post it in the room for you. A lot of you guys struggle with that 50-50 trade. Well, that's a perfect one. Let's put it in our spreadsheet, right? Everything we do revolves around seeing patterns that repeat themselves over and over. Taking pictures, annotating charts, asking questions so many times that this look creates zero hesitation. And look at that. Straight to Fibonacci support. Where the market was likely to stop, creates a full reversal, gives me odds favorable. Where the market was likely to continue, all the way down to where the market was likely to go. Nice job, Shane. You're developing trust, right? The more you watch price work its way to these Fibonacci areas, the more trust you'll develop. In the beginning, guys, you're going to get in here around 80, and by 76, you're out with $300 in the bank, and you're going to be going, oh, I could have had all that money. That's where you start to develop that management plan, but it all starts with this great entry. So Shane, good job. Where are we at? Let's see. And guys, if I ever accidentally skip one of your trades, let me know, please. Paul, 50-50 trade, right? You know, I think I took a picture of one just like this earlier. Are you with me, Paul? I want you to see this one. I took this picture and I sent it to my brother. Let me put it in the room for you too. This looks real similar, doesn't it? Not only is it a 50-50, Paul, but look at this. It's 3 areas that aren't broken, not just one. And if I look at yours, it's 1, 2, 3 areas that aren't broken, not just one. So you're relying on this momentum to smash through one-to-ones, to smash through support, to smash through a pivot low. And you're really hoping that it does it with divergence on your 5-1. And Paul, if you're going to have that 8 range chart, whoops, look at that. Holy smokes. You gave away an awful lot of advantage there. Does that make sense? not just a 50-50, but a 50-50 on 3 areas. So that's a good one. It's a great picture. It's a good lesson. I think that there's some great chart reading going on there. 50-50s just need to look good. Let me see where I'm at here. Paul, we just got yours. Guys, I'm going to take a few minutes. I didn't realize that it was 10:10. My beautiful wife just walked in and said time to take a break. Maybe I'm rambling a little bit. I don't know. But I'm going to leave you guys with the S&P. If your rules are met, take a picture. If your rules aren't met, take a picture. Tell me what you see. I'm going to be back in just a few minutes. And then when I get back, guys, we'll go to that next. We'll keep looking at your charts. We'll keep talking about advantages. And I will be back this way in just a few. All right, guys, here we go. Second hour. We'll talk about what we see live right now. And I think that this is such a great lesson, guys. Small triggers are still inside of the large, right? Not the best look for momentum, not like we had up here. Recognizing change on the smaller, faster chart. One divergence pulls you right back. Second divergence, third divergence. You're watching this fight without momentum. There's not a lot of advantage of momentum anymore. It may still go down, but there's three divergences in the same location. There's small triggers inside. You're giving away the advantage of momentum. All right, Gary, let's see what you did. 50-50 trade, right? Same one as Paul. Not just 50-50 on an area, 50-50 on three areas. Loss of momentum. Reversal bar, stranded sellers, antenna bar. Everything about this market said, be careful. AK Sid, taking a momentum style trade. Odds favorable, odds favorable. It's a lower probability trade just because you're on a 50-50 trade. There's not a lot of pullback. You let it break through. This is what we call a momentum style trade. A very well executed momentum style trade. Momentum in, momentum out. You get out at the key areas. I think you did that one as well as a momentum style trade can be done. Jose, let's see what you've been doing. Oh my goodness. You're busy. Termination. A little bit of a hop in, and then you get the right entry. But it's directly into a potential termination. Take your targets, take your targets, take your targets. Divergence low at fibs on big chart, 5-1 chart. Stop taking shorts regardless of what market flow says. I like that. Strong top, yes. Odds favorable, yes. Room to the target, yes. Jose, the only thing I don't care for is this one right here where you just jumped in. When it pulled back to the 1-to-1s, I think you had more of an advantage. And then it did everything the market said it was going to do. Nice job. Ed, you took that same momentum style trade. Odds favorable momentum. You take a little pullback to the area. Momentum in. Should be momentum out. Nice trade. Not a high probability trend trade, but definitely a nicely executed momentum style trade. Alex G, 50-50. I feel like we talk about these every day. 50-50, right? Divergence prints. Brings you back. You wait for market flow confirmation. You actually kind of entered on a breakout bar to the downside. You didn't wait for market flow confirmation. So it's not really a market flow entry. You never did get confirmation here, but it does go up. You manage it well. But definitely no confirmation going on there, Alex. This was a 50-50 with a loss of momentum and a loss of momentum on your market flow. Nothing but down bars, so no confirmation. You may have pulled a fast one there. I'm glad you got paid, didn't lose money. That's a tough one. Ed S. Not waiting for the pullback. Could have got a better entry with less risk. Nice. Not waiting for the pullback. A lot of jumping in, Ed. Is that what your plan says, though? So I know that we've talked about this in the past, too. Do me a favor, guys. If you're taking an unorthodox entry, help me out. Write your rules on your chart. Because if you do that, then I can say, oh, here's his rules. This makes sense. And Ed, I'm not picking on you. But the rules for this seem like they would say, if price goes down, jump in and hope for the best. And I'm sure there was more to it than that, right? So let me know what there was to that. Let me know what made you enter that market where you entered it. Let me know what got you out of that market where you got out. Paul, 50-50, no divergence, in at the area, quick profits, looking for the next fib, not willing to give it back on a divergence. Paul, I love everything about this trade. That's the perfect 50-50 trade. Nicely done. Shane, same thing. You had divergence on yours. Oh, because it's the micro ES. Nice entry. Great hold, Shane. I like it. Shane, just a reminder, and I'm sure you know this, the micro ES is not the large ES, so you're going to have different looks every now and then. Some people forget that. Ed, your rules are on the one behind it, you said? Is it the exact same picture? You've got rules here. Clear on all four charts, separation of triggers on all four charts. That's it? Just going to jump in? Okay. That's cool. You have reasons. I like it. Nice, Shane. One thing I did, and I'm not ever going to tell you how to do things, the volume is very similar on the ES and the MES, but clearly they're different markets, and I think that the ES is a good indication of what's going to happen on the micro ES. Like the micro follows the large. When I was trading micros, I would have that large ES up, just looking for termination conditions on that big chart. Elvis. Termination condition, things start to roll. Elvis, you let your triggers roll. You got your small to the bottom and you came in and got in after a pivot stop out, and it made it pretty easy for you. Elvis, are you in here? Because I'm having a proud moment right now. Great job. Great job. You got rid of a lot of headaches with that one. Pretty much, Reef Guy. Micros are like your first two ticks. Your first two ticks are paying commissions on micros. It'll eat you up. If you take 40 micro trades in a day, it costs you $60 worth of commissions. Elvis, great job, man. Really well executed there. That little bit of patience. I know it was killing you too, wasn't it? But look at that. The small get to the other side, pivot, stop out. You take your entry. And man, you earned that one. Nice job, Elvis. Uh-oh. Nexgen Jen. What'd you do? Strong triggers, 50-50, no divergence, perfect entry, got paid. All right, not that there's nepotism, but this is a perfect 50-50 trade. This is everything that I look for. I'm going to put it in my spreadsheet. Now we just need to get her to write rules on the chart. So every time you do this, tell me why you got in. Tell me where you got in. Tell me what you were looking at. Nice job. Great trade. Beautiful execution, minimal risk, very mechanical approach to taking money. I like it. Paul, let's see what you did. Same one, 50-50, no divergence, perfect entry, all the way down to the fib. And then we get anything can happen triggers with divergence. You get in at the mid band, super quick profits. Alex, strong triggers, 50-50s. You've got a little bit of divergence. Yep, you get a market flow signal. Now, Alex, I have to ask, you say that you're taking these market flow entries, but you're not really. Your market flow entry was after this bar printed. And if we go to market flow volume analysis, it's an initiation. Just a white bar isn't a market flow signal because you get white bars that are breakout bars. Okay. No problem. I'm one of those weirdos. I think language is important. I think that if you're telling yourself that this is a market flow entry, it's not. Market flow didn't give any indication that that was a good spot to take a trade. The combination of all these helped. But what market flow actually told you is that on a 50-50 trade with divergence, you had an antenna bar, reversal bar up, and you had stranded sellers coming into the area. So Gary, let's see what you did. Beautiful momentum. Everything says down. Perfect entry. Money, money, straight to the fib. Nice job. Great trade. Guys, you notice that all these trades look the same. The one great thing is everybody's taking the same trade. Everybody's waiting for momentum. We're seeing everybody trading with the direction of the market, with those odds favorable momentum, taking the best of the best. Elvis, same thing. In a little late, I think. 13.2 said go. That pullback comes down. I think one of the things that you're going to recognize here too is these are a little twisted right here if you take that pullback. Oh, that's your initial entry. Okay, pivot stop out. I like it. You took it all the way down. Sorry. Elvis. In at 76.67. $680 trade. Waiting for that pivot stop out. Beautiful. There it is. That's what confused me. Letting the 13.2 lead the way. All the way down to that fib. Elvis, great trade. Nice job. El Samo, let's see what we have. Another one of those times where I'd love to see rules on the chart. What got you in there? El Samo. Can I tell you what I see? And again, guys, if you're taking these trades that maybe are outside of the high probability trades, I support 100% what you're doing. But I need to know what you're doing. You are in at 69.25. So at 69.25, I was probably still in a downtrend. I had small triggers down. I had large triggers down. I did have a bunch of divergences, right? I had an awful lot of divergences here. So there was the potential that the market was turning. But how do you manage this trade? Is your stop all the way down here behind the pivot? Is your stop behind the small triggers? Is your stop behind the midband? And if you're trading into resistance right here perfectly with all of your triggers so far below, why not an exit here? And if that resistance just held, why are you trading back into it? And you may have amazing reasons for all of these things. But what I'm seeing is that this is a difficult trade to feel like I can find advantages on. Not saying it's a bad trade. If it's your trade, it's a great trade. But let me know what got you in. Let me know what you saw, what you felt, what you thought. Let me know what your advantages were. 13.2, momentum is slowing. The smalls are outside of the large. Make the market come get you at the high spot in the window. And it just didn't, did it? And Ed put that in there. Like Mark said, the ES and the MES side by side, there is a slight delay. It's a bigger delay on crude oil. And Paul, there may have been a misunderstanding in the come and get me thought. If everything looks like this, and I enter right here, my stop's right here, those guys have to come get me. I'm not exiting early with that momentum. Does that make sense? Not that they have to come get me at the highest point of the window as I get into the market. When my come and get me thoughts are when everything is perfect, when all my rules are met, when that momentum is off the charts, when there's nothing in the way. Come and get my stop. And I see exactly what you're saying. With a loss of momentum and a loss of momentum, you'd rather get in at the top, the bottom, because there's that chance. I agree 100%. I don't disagree. And as long as you're willing, two things have to happen. You either have to be willing to miss trades, right? Or you have to be willing to keep a little more risk. I'll show you a picture. You ready? Where's your window of opportunity, Paul? That's the only area inside of favorable large triggers, right? Midband's not there. That's outside of that window already. Yeah, it took me a second to see it as well. That midband's not even inside the large triggers anymore. The only one that is resistance. Yeah, it happens sometimes. I like the thought process that went into that, though, very much. Little overrun, loss of momentum, loss of momentum, loss of momentum, loss of momentum, loss of momentum. That's a lot of them, right? And it pushes up. And it pushes up. Take those kids to school, Paul. Then here's that same one. When you begin to lose momentum, you begin to lose momentum. Is it going to come in here? Is it going to go here? You lose that ability to determine exactly where the market may stop. Is it going to be 94? Is it going to be 98? If I get in at 94, is my stop safe at 02? So waiting for everything to flow the same direction, waiting for everything to give you the advantages. And it's a patience piece, guys, but if you've been patient, you've made money today, right? You followed rules. I'm seeing a lot of people making a lot of money today, a lot of rules-based. Price reaches an area of support. Guys, what just happened at 39.60.86? What's going on? Anybody? Does anyone recognize that as a termination condition? Price reaches an area of support. You ask yourself, where are your trigger lines? They all remain above that area of support. Therefore, no more short trades, right? But Mark, what if it pulls back to an area of resistance inside of favorable large triggers? Shouldn't I go short? You've given away the advantage of a clear path. When price reaches support, no triggers go through. You no longer have a clear path. Guys, look at Fibonacci. To the tick. Triggers above. These are areas likely to stop the market, not guaranteed. Price clears the area, pushes up, finishes the move. Price clears the area, pushes up, large triggers a full bar away, finishes the move. When it gets to that key area, look at the momentum, guys. Strong triggers break things. Look at Fibonacci. Isn't it amazing? Right from resistance. Right to one-to-ones, even with odds favorable momentum, and it pushes up. There's one of those pivot stop outs we talk about. Right to resistance. Look at that. Large triggers a full bar away. Market pushes down. 50-50s. This one had all sorts of divergence. Over and over, guys, you're going to recognize these things. These are patterns. And the more patterns, the more time you spend recognizing patterns, the easier your life becomes. That was a termination condition. That one worked. That was a low probability trade. And now we see the same thing happening on crude. Let's do this one real quick. I like this picture a lot, guys. This class isn't designed to make you a professional trader in a day. This class is designed to teach you to recognize advantages. This class is designed to let you know that I'm here with you 15 hours a week live to give you feedback, to walk you through challenges that you're having. What's the step-by-step path to becoming a confident trader ASAP? Guys, it starts with posting your pictures in class. If you're taking trades and losing them, post them in class. Let's see what went wrong. We had a great example earlier with Alan where that termination condition created challenges for him. Track your real-time performance in a spreadsheet. Give yourself the advantage of recognizing these patterns in yourself and in the market, getting you where you want to be. Learn the rules for when it's okay to trade, right? Learn your rules. Commit to your rules. Stick to your rules. Simulate your trades daily. Post pictures in class until you're sure that you have the correct rules. You can't practice the wrong trades, guys. Simplify your trades and your plan. What are you going to commit to? Go back, retrade the day on market flow. Take pictures of the correct trades. Repeat it every day until you always take the correct trades. Guys, that's your path. to getting there ASAP. Luciano, let's see what you gave us here. Luciano, directly into a termination condition. We actually talked about it as it happened live. Luciano, price. John, try this. Control V. So if you copy a picture, and let me show you. So like if I take this picture, oops, and let's just say I want to put it in class, I can't right click and hit paste, but if I hit Control V, it'll go into class. So try that, John. Let me know if that helps. True story, on the first break, that's the exact same question Nexgen Jen had. She's like, I can't post. I want to share, but I can't post. So John, try Control V. Let me know if that works. Luciano, you said you went with momentum. Okay. And that's okay. Luciano, remember, you can do whatever you want to do, right? But when I read your chart, it says no termination conditions. It's important to me that you recognize that price reached support, that no triggers broke through, that you gave away the advantage of a clear path, even from the top. Your top is 3 days up here. Luciano, this reached its target to the tick and then gave you the second divergence from it. You're trading directly back into it, 100%. And the fact that you only took 3.5 points at that fib lets me know that you knew that that was a lower probability trade. Totally okay. You executed it perfectly, right? But you knew that it was a termination condition. You took it. No worries. You took it because you had the advantage of everything going down. Triggers down, triggers strong, coming from there. Triggers strong, tiny window of opportunity. And it looks like you even took it while it was on its way down. You executed beautifully. But you did trade into a termination condition. Doesn't make it a bad trade, doesn't make it a wrong trade. And as long as you understand the challenge with the trade, then it gives you an opportunity to manage it appropriately, guys. I talk about high probability trend trades. That's just the foundation. Luciano just exemplified that when you're really good at reading your charts, there's more trades to be had. Great job. Ed D, absolutely I am. Good morning. 9 to 12. Oh, Ed A. I knew that too. I knew who you were. Yep, same schedule. And John, it looks like that Control V worked just fine for you. Man, post up. I'm in here for feedback from 9 to noon, but post anytime. Glad to see you in here. All right, NG time. You said you made your new charts. It looks like your fibs aren't matching mine. Does it take some time to match up? When did you open them? And let's see, 39.66. Let me pull my ES up. We'll take a look at it. 60. Yeah, we are not lining up. All right, NG, are you with me? I'm going to see and just make sure that he sees that. So if NG comes back, we can take a look at it. And that may be the difference. Guys, if you build charts, it's going to default to 30 days. So make sure that you change it to 10. Hey, Gratified, nice to see you. Welcome to the classroom. So we switch back and forth between crude oil and the S&P. What we teach, the patterns that we teach, the everything is something that works on every chart, every time frame. But we use crude oil and we use the S&P, the futures contracts. We use a 13.2 chart and a 5.1 because it gives us more opportunities for education. And ask as many questions as you want, please. I'm glad to have you here. NG, will you double check your settings and see if you're 10 or 30 days back? Paul, let's see what you did. Smalls below the large, breaking through. Window of opportunity. How'd that one work out? What is that? The ES? Looks like a good rules-based trade, doesn't it? Smalls below the large, no termination conditions. Window of opportunity is a couple ticks wide. You're at the top of the window, not the bottom. Hopefully there's a follow-up picture. John, perfect, you're good. I like it. Shane, you said you were stopped out. Let's take a look. You hate losing, now you're pissed? Well, let's look at it. Is the market coming from a good top or bottom? Well, it didn't create a full reversal, but you're coming off of resistance, right? I like it. Do you have odds favorable momentum? You're at the tail end of it. You don't have the best look. You don't have the best look. Do you recognize that? It's not like that. The smalls are kind of riding, so it's not the best of the best. But it's still not bad. I like it. No termination conditions, none present. Area for entry, absolutely. Shane, let's talk about the advantages that you had. You're trading with the trend. You do have momentum. There's absolutely nothing in the way. Your smalls are outside of the large. You have a window of opportunity that's not too terribly big. Shane, if you take 100 trades, how many of those do you suppose you're going to lose? If you have a methodology that wins 70 to 80% of the time? $30-ish, 25% of them, right? And Shane, this is one of the best things about this class, in my opinion. You had all the advantages. You took the perfect trades. You followed your rules. You stuck to your plan. This is a cost of doing business. Don't waste your energy being pissed. Be pissed about, I don't know, something productive like Nazis or something. Well, and this is where posting helps. Did you have all the advantages? I think so too. So let's call that yes. Rather than I thought so, let's say 100% based on a checklist, I'm good. Did everything right. Had every advantage. I had a statistical advantage taking this trade, right? 100%. And what I realized is that sometimes things don't go my way because I can't win every trade. That would be foolish for anybody to try to sell you a system with 100% winners because there's no such thing. So next time this trade happens, you take it again. because it has the advantages. And after 100 trades, Shane, if you do this every time, dollars to donuts, you're winning more than you're losing. Don't waste energy being pissed, because when you're pissed, you revenge trade. When you're pissed, you deviate from your plan. You got this. I'm going to be that pain in the ass voice that reminds you that it's okay. Oh, I got you. You keep posting. I'll keep talking you through it. If you do something silly, don't worry. I'll let you know. Jose, are you coming from a good top? You say, yeah. Odds favorable momentum? It's iffy, but you've cleared through. Entry, right inside of those triggers. First profit, out with divergence. I like it. Great trade, great execution. Nice job, Jose. Patience is key. Sour candy apple. No truer words have ever been spoken. I used to hate this analogy until I started understanding it. John Novak used to say in class, he goes, if you walk into a bank and you say, give me all the money, you're usually face down, tased, on your way to jail, right? But if you walk into a bank and you walk up to the teller and you say, hey, give me my money, please, you usually walk out with the money. Not everything's your money. Every move that the market makes doesn't belong to you. Every up, every down, every swing, it's not yours. Your moves are when you have odds favorable momentum. Your moves are when you have no termination conditions. Your moves are when that pullback comes to an area of resistance inside of favorable large triggers. Look at this picture right here, guys. I want you to see this. Medium probability trades. I'm going to put a circle on this one real quick because I want to talk about that next level. I'm going to make this one bigger too. Your ability to read charts is going to take you from high probability to medium probability. Do I have odds favorable momentum? Rule number one. No, right? I don't have odds favorable momentum. That's an issue. But let's look at the rest of it. Get off of there. All right, I'm stuck. Don't have odds favorable. Do I have termination conditions? Absolutely not. Do I have smalls outside of the large? I do. Do I have a tiny window of opportunity? I do. I'm trading with the trend, with momentum, tiny window of opportunity, no termination conditions. And guys, this is where your ability to read a chart quickly is going to pay dividends. What happened right here? Price reached an area. Do you guys see it? Price pulled back to the area. Let me put this over here. What do I ask next? Where are my triggers? Based on that recipe, guys, for identifying areas likely to stop the market, can we say that because price reached resistance, because all of the trigger lines were down and below it, we can comfortably say that this is an area likely to stop the market? Give me a Y if you're with me. And just so you guys know, if I go to the rules in the manual and I look at termination conditions, Doesn't that look familiar? Remember, it's all patterns. So from there, if this is an area likely to stop the market, if all of my triggers are down, if nothing's in the way, and that market pulls back to an area of resistance inside of favorable large triggers with the small triggers outside of the large, in an area likely to stop the market that lines up with an area likely to stop the market, do you see how this is a very potential short trade? Not a high probability trend trade, but a medium probability trade with enough advantages that it's worth it to take it and manage it assertively. Remember, guys, that you are not obligated to take nothing but high probability trend trades, but it's going to be your ability to read your indicators that's going to have you recognize advantages. Oh, not again. Everything's below, price reaches the area. Look what it does. It pulls right back to that area. 3 divergences in the same location lets me know that we may push higher. It's the ability to read your indicators, guys. That's all we're doing, is creating advantages based on patterns. Price exceeds an area. Pushes all the way back up to the mid-band. It's a 50-50 trade with divergence. Do you see it? How many times do we see price clear an area, push back up, go to the next area? Clear an area, push back up, go to the next area. Over and over, guys. Patterns are unbelievable. So if I know that if price clears an area, a pivot comes from someplace, right? Comes from a place that's not an area, pushes all the way up to that mid-band, the large triggers can't break. I get a loss of momentum, taking away the perfect entry for a 50-50. Awesome, that worked, NG? Great. So Shane, I just walked through it. I want you to take a deep breath and let's write rules on your chart, okay? Because Shane, if you take the minute to write the rules every time you take the trade, if you use that checklist, it's going to pay dividends. Do you have odds favorable momentum, Shane? Let's walk through it together. Yes. How about no termination conditions? What do you think? No. Okay, you said strong bottom, so here we go. Another reason this class is amazing. Shane, is that a termination condition that creates a full reversal? Or is that just a pivot that has divergence? There we go. So here's our aha moment on this one. This is just a pivot. In order for this 53 price to be a termination condition, price has to come all the way back down to it, test it, and then the trigger lines have to remain above. Does that make sense? Just a pivot right now. Cool. And guys, I love going back to the manual because you'd be amazed. Just a pivot. It might add or it might not. When it tests it, then we get a pivot stop out. Now we have the termination condition. So Shane, we have a 50-50 on the termination. Do you see it? The small triggers are broken. The large triggers haven't. So typically, if I have a 50-50, I like this to be perfect. Not everybody believes me when I say that. That loss of momentum on an area that hasn't yet broken, for my plan, makes me nervous. Especially, and this is a chart reading thing, what we just talked about. Price exceeds the area, gets all the way up to that mid-band, creates a 50-50, and like Ed said, a lot of the times it likes to finish that move down, especially in a day that's been trending as hard as it has today. So where are we at? There we go. 50-50 with divergence, overruns. And now we're just kind of caught in limbo. Larger up, smaller down. So Shane, the one thing that you did on that one is you just kind of gave away the advantage on that 50-50 trade. And maybe just in the very beginning, you commit. Maybe just in the beginning, you commit to that best of the best look on the 50-50s, and then your chart reading is going to take you to a point where you understand where it might be appropriate to throw that one out the window a little bit. Maybe you're coming directly from a great termination condition, and there's different things that go into it. Reef Guy, my termination condition conviction is steadfast. 100%. If I reach an area of resistance and there is no trigger lines through, I'm not trading into it. I know a lot of traders that went short here at 61.59, but there's no trade, right? There's not odds favorable momentum right now. We have indecision. We have large up and small down. I have flat synthetics. But I try to be 100% consistent, Reef Guy. I try not to change my thoughts on termination conditions. I try not to change my thoughts on entries, on momentum, because the second I start making opinions, I tend to lose money. Patterns tell me that that's a pretty likely spot for the market to go. Because when a pivot comes from below an area, pulls all the way back to the mid-band, large triggers don't follow. You say the 21's in the middle of nowhere? How do you feel about this one, Reef Guy? Completely overran the area. Price pulled more than a full bar away from the large triggers, which have remained down. Do patterns let me know that price is likely to pull back to 55.37 to close the gap to the large triggers? Yours is at 43. But even if it wasn't, these large triggers don't say up, right? These large triggers are a full bar away and remain down. Even if all I had was triggers. I love this lesson. This is a good one. So look at this. Weakening of the triggers, pulls up, snaps back. We're in a down trend. Weakening of the triggers, pulls up, snaps back. Weakening of the triggers, pulls up, snaps back. Weakening of the triggers, pulls up, continues up, might have been an area. They weaken, pulls up, snaps back. So I see this a lot, right? And this is a 21-3. Weakening, pulls up, snaps back. So that same pattern, look, there it goes, trying to close the gap back to those large triggers. Not a high probability trend trade, But if you're a chart reader and you say, well, on this chart, it's likely to close the gap. On this chart, this is likely to hold. On this chart, everything rolled with a pivot stop out. Elvis loves that look. There's your first trouble spot. That divergence low with the large triggers up and the small triggers down. This thing may dance a little bit right around this key area. Isn't that cool how you can do that though? How you can start to gauge what the market's likely to do based on your ability to read indicators. And then your plan is going to grow. If your plan said, this pivot stop out right here, coming from a 50-50 that failed, gives me room to get $300 worth of profit back here, and now the small triggers start coming through. Large triggers confirm, pulls right back to that area that's struggling so much on the 50-50. And because I looked at my 21 and said that when price pulls a full bar away, new users, there's nothing for you to do. This says up and this says down. Period. That's it. Rule number one's not met. Chart readers now recognize that a pivot stop out here with the large trigger still up, they're losing their advantage. But that's a good first shot for continuation down based on trigger lines rolling, based on strong smalls, based on a 50-50 that didn't work. So you start to stack your knowledge and create these instances where you can make educated decisions. Pragmatic decisions, chart reading decisions, not hope decisions. Does that make sense, guys? Same thing on the crude, right? Pivot from beyond the area. Look at that, guys. The market pushes up more than a full bar away. It closes the gap, finishes the move to the key area. I can't make this stuff up. It happens every day. Every day this happens. Guys, I'm going to take a few minutes. If you take a trade, take a picture. If you don't take a trade, if you're brand new, gratified, you're in this list. If there's something you want to talk about, talk to me. Ask a question, raise your hand. This is your classroom. I like for the last hour to be 100% dedicated to what you guys want to talk about. So when I come back, I'll see if there's any questions. Otherwise, we'll just read charts. Back in a few, guys. All right, guys, I am back. Let's break into that last hour. As we do, let's do something real quick. Check it out. Smalls below the large are wide. They're angled in the direction of the trend. I'm coming from a termination condition that created a full reversal. I have the tiniest little window of opportunity right here. Guys, what are we waiting for? What do you need to activate that limit order? Anybody? Shane, help me out. We need a pullback, right? What signals the pullback? Reversal bar. Gosh, I love it. But can't we see odds favorable? No term, everything down. Is it too soon to have an order? We already know what has to happen, right? It might change. It may not even come back. It may just straight line. If the conditions change, I'll cancel. But right now, we've got a pretty good indication of where things are likely to continue. Guys, that's how quickly your analysis is going to come to be. That's how quickly you're going to be able to look at your charts and understand the advantage of momentum, no termination conditions. You'll be able to identify that area where the market is likely to continue. Let's do it, right? It's simulator. I'm not calling trades. All I'm doing is talking about advantages and rules being met. It either is or it isn't. It does or it doesn't, right? Nothing for me to do. I've entered the market. I can't move my stop until I get a reversal bar in the direction of the trade. I don't know if I'm going to get it, guys, but what I do know is that I have the advantage of momentum. I have the advantage of no termination conditions. I have the advantage of a market that is likely to continue from an area inside of favorable large triggers. My first target's at $100. My second target is at $200. I am emotionless. I am pragmatic. I'm not making guesses. I'm not hoping. First target's hit. I'm at break even. I have $100 in the bank and I can't lose. I'm leaning back. I'm relaxed. I feel good about it. Don't have a care in the world, guys. I have the advantages, don't I? Do I have the advantage of momentum? Do I have the advantage of no terminations? I took it from the best of the best area. Guys, this is it. This is all I can do. I don't control the market. Some jerk with $1 billion account might buy 1 million shares and make it push up right through my stop, right? Or all the advantages that I have may push me to my next target. Got no idea. Ed says it's going down to divergence. I hope Ed's right, but if he's not, I'm already up $100. I can't lose, right? I'm not emotional. I'm leaning back. My hands are in my pocket. I'm drawing a picture. I'm texting my wife saying, don't move your targets. It is what it is. It might come get me. Terrifying, isn't it? Oh, there it is. I'm out. That's not a bad way to start the day, though, is it? Every advantage. That's it, Alex. When it's gone, it's gone. Cool. So guys, I'm glad that happened when it happened. If you're a high probability trend trader, there you go. Pretty cool, right? 100% mechanical, 100% just doing it. All right, gratified, are you with me? Let's answer your questions. Let's go to NinjaTrader margins. What can be traded with NinjaTrader? Well, let's find out. Let's go to NinjaTrader. And let's look. Dun, dun, dun. Huh. Let me go back one real quick. There it is. Future margins requirements. Shoot, I'm trying to find it. They should have a link for me. But NinjaTrader is going to let me know. I'm going to give you this link. So Gratified. There's a link to the NinjaTrader margins. Everything on this PDF file is what you can trade with Ninja. If it's a stock, you're going to need a different set of data. So that's what you can trade. Is NinjaTrader similar to MetaTrader 4? I have absolutely no idea. I don't know what MetaTrader 4 is. I've only used NinjaTrader. And then are my charts set up for certain time frames? They sure are. It is not similar to MetaTrader 4. Thank you, Shane. Gratified, the way we teach. 13.2 chart. It's a larger, slower chart. It's a broad stroke of a brush. Entries come from a 5-1 chart. There's also 21.3 charts, 34.5 charts. There's 8 range charts. Arnold, I'm not sure. It still looks like it. It can still use the Renko bars. It is a tick. A tick is just a movement of price, right? Stocks have movements in prices. And here comes John Novak, maybe to help you on that one. Then maybe your stocks will be in increments of a quarter of a dollar, whatever the stock trades in. It won't necessarily be a point. It will simply be price. If you look at this, 39.59.75, it's just a price. That's all it is. So as your price goes up and down, you're good. Gratified, are you with me so far? And you say, what currency is used for oil in the S&P 500? It's the US dollar. So all of these movements are US dollar. And then there was a number 5 in there. Let me find it. Did I miss your number 5, Gratified? There it is, number 5. Are trades taken with brokers? If so, do you recommend certain brokers? So Gratified, every trade is executed through a broker. I don't recommend brokers. Do your homework, check it out. Without saying it's a recommendation or anything like that, I have mine with NinjaTrader. So there's all sorts of different brokerage houses out there. You want one that works with NinjaTrader for sure, or that links to it or does it, but I don't recommend. You can go through and look. You can look at prices. You can look at, I can't think of the word, sorry, commissions, and make a decision. Did that help? Great questions. Great first-time questions. Awesome. And then Arnold, there's his Tesla chart. You'll see that it's a 340 chart. It's a 210 chart. It's a 1330 range. So you can trade the stocks, but what you run into is you may have to adjust the time frames. Shane, what made it nice? Oh, that's your old picture. That was your old crude picture, or your old MES picture. Arnold, that is Tesla. is what John was showing you. These are what his Tesla charts look like. They're loading right now. It's the exact same stuff, but he adjusts the time frame to work with the stock. So it's a much larger chart compared to a 21.3. It's a 210.30. Awesome, Arnold. Go get him. He'll get you. So it's the same bar type, 2 dynamic Rincos, your own broker. And there you go. Gratified, that one's for you a little bit there too, I think. Or no, that's for stocks. You see your odds favorable on the 13.2 wasn't perfect, but what are all the other advantages? You've got triggers down, no termination, smalls outside of the large, tiny window of opportunity. Do you have an after picture for me, Shane? How'd that work out? He made money for sure. So Shane, this is going into all filled. Perfect. Remember we talked about medium probability trades. One small issue exists. Shane, your one small issue is that it wasn't the absolute best momentum, right? But everything else said, great, take it, manage it assertively. Perfect. I think you did a great trade there. I think that was an awesome trade. Nice job. What I would have liked to have seen, well, maybe not. 75.30. Up here, it looks like there was a great opportunity. And you move the second target to above divergence. Your trouble spot with a medium probability. Perfect. Or you could even move your first target just above divergence and put the second one at the fib in case it goes. You'll learn to manage these through repetition. So nice job. There's the ES, guys. We took that high probability trend trade, made 100, out break even, easy peasy, right? 100% rules based. Shane, I think this was you back here. Worked out. And then right here, smalls below the large, no termination, pull back to an area of resistance inside of favorable large triggers. It doesn't make it. Oh, maybe that's wrong. Hold on, here we go. There's your anything can happen. That was it right there. Nice. Shane, you're doing amazing for a week. Keeping it simple, right? Keep it simple. Let's have some fun real quick, guys. All right, this is for my newer users. It can be for my older users too. Let's find an entry. What do you say? All right, guys. On my 13.2, do I have odds favorable momentum? I want to see my new guys helping me out here. Nexgen, a Y would be appropriate. Guys, I have to walk to the other room real quick. Hold on. Andy, perfect. Yes. Do I have any termination conditions? Has price reached an area likely to stop likely to stop the market? No terms, right? All right. So am I done with that 13.2, guys? Do I have the information I need to look for an entry? This is me leading the witness. What do you guys think? Can I go to my 5-1 and look for an entry? Yeah, I can. Man, everything's going down. What should I do? Should I jump in? Do I have, let's do the first part. Are my large triggers down and strong? Yeah. I like that look. I'm going to start sizing up. Do I have any areas here that are going to fall inside of those large triggers? Does anyone see a mid-band? There's nothing to do yet. Right now, I've just made the decision that it's time to take a trade. And if I get what do I need to initiate this trade to get me to activate an order? Do you guys remember? Rule number 3 says that I'm going to use a limit order to do what? To buy or sell a reversal, a pullback. Perfect, Walter. That's the perfect language. And Shane, exactly. I'm waiting for a reversal bar. There it is. So now I have a reversal bar. The signal's the beginning of a pullback. Where's my window of opportunity? How easy is this? It's an area of resistance inside of favorable large triggers. That's pretty cool, right? That's a tiny little window of opportunity. So right at the bottom of that window of opportunity, I'm going to put in an order. Am I buying or selling? Selling, absolutely. Paul. So I've got my order in. I have my window of opportunity. I've got my reversal bar. I have my odds favorable momentum, and there's nothing in the way. Oh, guys, it's going without me. Should I jump in? You guys want me to wait for an entry or jump in? Andy says no, don't jump in. Andy, I agree. There's another reversal bar. My window of opportunity's lowered a little bit, hasn't it? It's moved. I'm going to move that order below that mid band. And here we go. I want to drop it a little more, 75.26. And now it finally catches me. Look at that, guys. It danced. But I stayed committed. This is my trade. You're in the market. It's 75.26, okay? You guys got that? Entry at 75.26. My initial stop, 12 to 14 ticks outside of that window of opportunity, guys. 26. I'm just going to go 38. Here's my stop. Guys, remember that we're working with areas. We're working with likely to continue. We're good. My first target, if I'm in at 26, my first target is 16. You guys with me so far? 10 ticks, $100, right? We'll make it spring green. My second target is 06, $200. Is everybody with me so far? Feeling good about it? Whoops. Here's our targets. We're in at 26. Our stop is 12 ticks. You guys know it's fun. Is you when you delete the CEO's message just to mess with them. In at 26. I didn't know you could do that, John. Thank you. What do I need to move my stop, guys? What has to happen for me to move my stop? What am I waiting for? I'm in the trade. I'm committed. I have all the advantages, right? What am I waiting for? A down bar. Perfect, Paul. Uh-oh. Man, this trade's going against us, guys. We're 3 ticks in the hole. Should I hit close? Should I get out? Should I move my stop? Holy crap, what do I do? Bail, bail, bail. I don't know. I've got odds favorable momentum, right? And I've got no termination conditions. And I had an area inside of favorable large triggers where that market's likely to continue. I'm going to hold on to this one, guys. I like my advantages. And I know that the advantages, when they're put together, I love it. It may go a little bit beyond that window, right? That's why I start at 12 ticks. Man, that was close. You guys want to know the truth? This trade went 9 ticks against me before it went down. Thank goodness I didn't just jump in or just jump out, just bail out. Now my stop is 2 ticks above the reversal bar. So guys, I've got 11 ticks of risk on this trade. I've got 11 ticks with odds favorable momentum. I've got 11 ticks with no termination conditions. I've got 11 ticks by patiently waiting for the market to come to the best of the best area and then head in the direction of the trade. I have enough advantages that I'm willing to lose this one if it doesn't work out. And it's going, and it's going, and I'm feeling good about it. Look at this. First target hit. So guys, now you have $100 in the bank. Target reached. We are methodical. We're mechanical. We're pragmatic. I can't do worse than $100. Are you guys with me so far? This is about as slow as we can do it. This is something that you can do on your own. So what are the 2 options here? I either reach my second target or I'm out of this trade break even. Is everybody cool with that? Feel good about it? Oh man, here we go. I'm $160 up in this trade. Boom. Target reached, guys. Congratulations, you just made $300 on a high probability trend trade. If you're in your first couple weeks, you probably don't believe it yet. You haven't developed trust. And guys, if you're in your first couple weeks, a lot of you, I'm going to see an exit right there. When that market started to give 2 or 3 ticks up because you panicked, because you had a holy smokes moment, now it's going to turn against me and you will abandon every advantage that you had because you were afraid of what might happen. You ignored odds favorable momentum and no termination conditions, and you exited a trade, and then you got mad because it went without you, and you probably took the next trade that didn't have the rules met to try and get that money. What do you guys think? Is this something that you can practice? Anybody can do this. How long it takes for you to get great at it is up to you, but I can tell you 500 reps, 1,000 reps, 3,000 reps, you're going to get better every day. You're going to get better every time. Paul, what'd you do, bud? Small's above the large are wide, they're angled in the direction of the trend. Here you take the pullback to the area inside of favorable large triggers before the area is reached. Quick little target. And then we get a 50-50, right? Area hasn't broken, coming from an area. Divergence prints on a 50-50, Paul. Not coming from a strong bottom. And that one didn't even begin to work out. Did it not look like 50-50 at the time of entry? I pass on those every time. That's just me. That's what my plan says. My plan says 50-50 with divergence. It's not my trade. I don't have to. Whoops. Not quite 50-50. Area still hasn't cleared yet. No areas reached inside of favorable large triggers. Not my trade. We saw this one already. Great looking trade, mechanical. We were able to make money. Why don't I trade into pivot stop outs? Guys, look at this. Pivot, not from an area. Pulls directly to that magenta line. Absolutely no trigger lines break through. Guys, that is rock star termination condition. Remember when we said pivots? Oh, there's that box. Pivots from beyond the area tend to push up, finish the move. You still have to wait for rules to be met. We'll see if it makes the move. But we put that box in there at 11 a.m. It's now 11:40. Kevin, if your ATM looks like this, wouldn't the first target be 200? Nope. Your first profit target is 10 ticks. So Kevin, when you reach 10 ticks with 2 targets, you're at $200 profit, right? But I want you to think of it this way. You're at $100 profit with 2 contracts. Does that make sense? If you closed both positions, you would have $200 worth of profit. Whoops. So let's do this. Wrong one. All right. Kevin, I'm going to have 2 lines here, okay? Different colors. So John doesn't get me. If we're in at 39.60, 2 contracts, right? Are you with me so far? We entered the market at 39.60 with 2 contracts. So at 39.58, both of those contracts are up $100. Are you with me? Cool. If your first target is 10 ticks, one of those contracts comes off, which means that you're still in the market 1 contract, and it's at $100 of profit. Does that make sense? And you're looking for the second contract to make it to 56. I know, we're doing the 10 and 20, John, because that's what he showed on his ATM. Did that make sense, Kevin? If you're at 10 and 20, 2 contracts make it to 10. 1 comes off, which gives you $100 in profit. Here, John, let me show you the picture again. It was a crude ATM 1020. That's why I was using that for an example. Two contracts make it 10 ticks. Kevin, I love your ATM. I don't think there's anything wrong with it. It's a decision that you have to make. Let me go to crude so it makes more sense. I'll show you mine. Here's my ATM. Looks just like yours, Kevin. So this is that mechanical approach. This is that 10 ticks, 20 ticks. I don't have a trade, Paul. I don't have a rules-based trade. So there's nothing to show them yet. All right. So if I buy the market right here, Kevin, first contract is at 74.86. Second contract is at 74.96. If I get to 74.86, and I'm fighting everything here. This is me counting on a pullback. There's $100, but it's only 50 on two contracts. See how I'm up 140? Up 120? If I reach here, my profit will be at $200. When that first contract is filled, now you see that my P&L is at 90. One contract remained on. It cut it in half. So that second profit target, when it's filled, takes out the second contract. Does that help a little bit? So it's going to show you 200. But once that first contract comes in half, it cuts it in half. Cool. Paul, good idea. I hate just jumping in Classroom because I don't want people to think that I'm advocating just jumping into the market. But guys, when I have a 50-50 trade and I already have a divergence and I get a pivot stop out, I had a pretty good idea it was going to at least retrace up to here. That's why I don't jump into 50-50 trades with divergence. It's not a trade. And guys, here we go. There's your fight on the S&P. Sellers bring it down, buyers push it up, sellers, buyers, sellers, buyers, sellers, buyers. Look at it squish. Small triggers down, large triggers up. 1, 2, 3 divergences in the same location. Is that enough to keep you out of a short? I hope so. Look at your 5-1 chart, guys. Your large triggers are going up, or your synthetics are going up, your large triggers are down. Your small triggers are down, your large triggers are up. Nothing to do. Guys, that's what we call a go make a sandwich pattern. Paul, do you remember this pattern? Pivot stop out below, pivot stop out above. Everything says down. Giddy up. Chart reading, guys. Your high probability trend trade is going to turn into an awful lot of amazing trades if you commit to learning to read your indicators. Good stuff today. A lot of great lessons. Don't you think? 13.2 said down. Areas were down. Momentum was down. Large triggers were down, areas were down. I was able to recognize potential change on the 5-1 to give me a clear understanding of where all of that down was likely to continue from. And guys, when I talk about no divergence on a 50-50, I'm talking about it for brand new users. Paul, at the pivot, stop out. Not above it. And guys, you're going to have the same lessons over and over and over again. And your chart reading is going to get you to that point. Paul, I know that you know this lesson. Pivot stop out here typically results in a pivot stop out here, right? Just didn't fill you. You tripped over $10 worth of profit by not putting it right there at the PSO. Does that make sense? And it did exactly what it was supposed to. With all the advantages, well, and now you have something else to think about. Absolutely. Creating expectations based on patterns, based on momentum, based on areas. And then where's your first trouble spot? Right there. Almost $200 of profit away. It's a lower probability trade because you're giving up momentum on an area. Isn't that great? So you're developing a plan right now that suits your needs and your desires and your wants and all those great things. Guys, the way you read charts today compared to the way you're going to read the charts 6 months from now is day and night. All right, Shane. And then Shane, we talk about consistency and entries. I see 2 jump ins, right? How do you manage them? Oh, that's a stop. That's a long and a stop. That's a long fighting triggers. I'm not sure if I have a picture of the book. Let me see. John Novak, are you listening? Do you have the book, How to Commit Financial Suicide? Shane, when these triggers look like this, the chance of this working is slim to none. Like almost 0 chance. This one has a much better chance, without a doubt. And then this one, waiting for the pullback, when you get this pivot stop out here, it typically results in the pivot stop out here. Which one was good? This one? Yeah, that one was good. It just didn't work, right? I like that you said that, because you noticed that you told me that one was good. You didn't tell me that you were mad. One day, we got some progress. It's hard to not be mad when stuff loses. Trust me on this one. But do you think going long against all those triggers had anything to do with you losing this trade? Forming an opinion, that market should have gone up, damn it. So this is the one that we eliminate. I'm very guilty of that. There was a time where when I took this one that was perfect, I would say, no, it has to go, and I'll go from there. No, it has to go. Well, it's supposed to go, and then I missed that one. Maybe at the pivot stop out it'll go. And my brain is so wired to believe that this market is supposed to go up that I missed the one with odds favorable momentum and everything breaking that should have got me paid. Yeah, Shane, what you're going to be maybe relieved to hear is that it really is about 90% of the day traders that I meet initially. It's a very normal reaction to loss. Revenge is where the human brain goes to. So what we do, you can fix it. You're fixing it right now. You're learning to trust the rules. And you're learning to trust the indicators. And you're learning to recognize when you begin to lose advantages. And you're going to learn to sit on your hands. Dude, Shane, you are on such a good path right now. I can't stress that enough. Just simplicity, right? And let's go back to it. Let's finish the class with this. The one thing that having a plan does for you guys is it gives you one look. You guys remember that movie City Slickers from the 80s? Billy Crystal? The crusty old guy held up one finger. He goes, there's one thing, and then he dies. This was his one thing, guys. Have a plan. Have one look that you know wins more than it loses and commit to it. And then grow from that point. So if you have a trading plan with 7 trades and you're not winning, lose 6 of them. If you don't have a management plan, come up with one. If you can't show me 10 pictures of your best entry, you probably don't have a plan. How do I know this? Because guys, I've been working with you guys for a couple years now. And I see the same thing every week, different person. Hey Mark, how did I get in right here where no rules were met? That's like the most common question. None of my rules were met. How do I get into the market there? None of my rules were met. How do I get more profits out of it? None of my rules were met. Guys, get your rules. And then just go full rock star on it every day. Same thing. Get so good at one thing. You guys ever seen those long drive champions? Most of them can't play golf, but they can hit a golf ball 400 yards. They pick their one thing. Eventually they'll develop a short game. So will you. Guys, that is it for me. Good day. Great lessons. I appreciate you being here. The room is yours. Like, this is open 24/7. Talk to each other. Share your pictures. Hold each other accountable. But do me a favor. And Shane, this is for you too. This is going to help you a lot. Write your rules on the chart. Every time you take a picture, write your rules on the chart. Reinforce good lessons. And then if you didn't follow the rules, you're going to be able to see it instantly. We'll talk about it. But what you'll find is you'll be able to police yourself a little bit, and it's going to give you an advantage for sure. Yeah, everybody in this room has gone through what you're going through. Everybody in this room has been there. Guys, look at that. They finally reached that key number. Look how fast it shot up from it. If you're just joining Nexgen, guys, these key areas, you know where fights are going to happen before they do. Debbie, you're so welcome. Always nice to see you in here. I'm going to call it a day, and I will see you guys tomorrow. If you write a plan and you want me to look at it, email it to me. I'm on the contact page, guys. Some of you have taken advantage of that. Some of you have chosen not to. Do it. Write it out. Send it to me. Let's talk about it. I have 2 weeks before we leave Dallas, and my afternoons are free. I got time to look at emails. So I will see you guys in the morning. If you take trades this afternoon, bring them to class tomorrow. Let's take a look at them. I love it when you flood my class. I'll see you guys tomorrow. You guys take care.